you have been watching the GTA housing market, it feels like a roller coaster that has been heading downhill. Economic uncertainty has been the major theme, with the total sales dropping and inventory is rising, creating big advantages for buyers. The average selling price across the GTA has seen a slight decrease and a significant psychological shift in the market. But the average selling price does not paint the full picture. The real story is found in specific suburbs where the market is not just cooling, it is in a virtual freefall. Today, we are pulling back the curtain on the top 5 GTA areas getting hit the hardest and exploring the real reason behind the collapse. Stick around because you will know exactly which pockets are seeing the steepest drop. Backed by the latest numbers, kicking off our list is Halton region, home to desirable areas like Burlington and Oakville. For years, Halton region was a symbol of stability, but it's now signaling a broader housing correction. The average sale price for homes in Halton region recently saw a 6.1% drop compared to the previous year. And the primary reason for this price drop is the affordability crunch finally hitting home. Family-friendly properties like single-family home, townhouses, and condos have all seen price decline. And we have buyers, on the other hand, are constrained by the borrowing cost and are hitting the brakes. Halton homes that once vanished in bidding wars now sit on the market and forcing sellers to adjust to the new reality, where even the most sought-after suburbs are no longer immune to market pressure. In the number 4 spot, we are zooming in on a specific market segment in turmoil: the condo corridors of North York. While the broader GTA condo market is facing a pressure, North York is a clear example of how specific factors can accelerate a downturn. The core reason here is a classic case of investors' retreat. For years, investors banked on a rapid appreciation and rising rent, but that financial model now is broken. A flood of newly completed units has created a massive oversupply, and with rent not keeping pace, many investors are trying to sell all at once. This has created a full-blown buyer's market, with some North York condo communities seeing year-over-year median price drop of over 8%. By the way, my name is Ilham Ibrahim. I'm a real estate agent here in Vaughan. I help families navigate buying and selling with a clear and simple real estate guidance. If you would like some help or want to chat about your situation, click the link in the description below and book a 15 minutes free consultation with me. Coming in at number 3 is Vaughan, a city that was a poster child for the post-pandemic boom. The brutal hangover from that unsustainable price explosion is now being felt. Vaughan is being hit by a perfect storm, a sharp price correction combined with a wave of sellers who listed unsuccessfully before and are now forced to drop their prices. And the real reason is that Vaughan's market was fueled by speculative frenzy. Now that the emotion has evaporated and high interest rates have taken their role, that bubble has burst. While detached homes in Vaughan have shown some resilience, but the condo market is where the pain is most visible. Our number 2 spot goes to Peel region, specifically the markets of Brampton and Mississauga. These cities are now ground zero for what can be called under-asking shock. And the fundamental reason is that Peel region is very sensitive to affordability. As high interest rates squeezed household budgets, buyers lost significant purchasing power, which shifted the entire market dynamic. In Brampton, for example, detached home prices have seen noticeable drops from their peak, with inventory rising and sales slowing. This lack of demand puts immense pressure on sellers, who are forced to compete downwards and accept a tough new reality, where buyers have regained control. And the number 1 GTA city where home prices are collapsing the fastest is Mississauga City. All the issues that we have discussed, investor exudes swelling inventory and affordability-driven weak sales are converging here to create the epic center of the GTA housing correction. And the main reason that Mississauga on top of the list is that every problem is happening all at once and amplified. The condo market have seen the sharpest correction, with median sale prices for condo apartments dropping 9.7% year over year in late 2025. At the same time, single detached homes saw an 8.3% decline, with a huge supply of condos on the market. Builders are hitting pause, and investors' owners are facing monthly losses, forcing them to sell into a market. This catastrophic combination of factors makes it the heart of the downturn. So there you have it. So Halton, North York condo corridors, Vaughan City, Peel region, and topping the list, Mississauga City. These are the areas feeling the brunt of the market downturn. The correction is fueled by a combination of factors: an affordability crisis driven by high interest rates, an investor retreat based on a broken profit model, and a psychological shift from market frenzy to extreme caution. This has led a surge in inventory that has given all the negotiation power back to the buyer. While some hope for a rebound, the current data tells the story of a market in full retreat. Are you seeing these changes in your own neighborhood? Let me know in the comments below. If you found this breakdown useful for making sense of this chaotic market, do me a favor and hit that subscribe button. I post videos every single week to help you stay ahead of the headlines. Thank you for watching, and I'll see you in the next video.